Guys, and welcome to my channel. Let's get straight into the charts. Remember, this is just for fun. I'm not your financial advisor. I'm back in my office so I can do this update on gold and silver. Let's start with gold. This is the gold chart. How you can see how gold has developed through the year, starting at around we see this beautiful cup and handle pattern starting at around 2011 and up to now, and we are still forming this handle pattern, but we may have finished developing this pattern and we are waiting for a breakthrough to the upside. And this is very bullish, so that's the reason why I'm bullish on gold. And there are two ways of measuring the price targets of such patterns. One is to measure the top of the handle all the way to the bottom, and then yeah, we can put it on the neckline, or draw the neckline here, around here, and then from the neckline all the way to the bottom of the cup. And I already measured them for you in my previous videos, and my price target is very conservative. Price target is 2,300. This is very reasonable once we break above the neckline, which is around 1910. So when we are about, or 1920, when we are about above 1920, we break above 1920, then this is going to be a very valid, reasonable price target. The other price target, this is also a valid price target, 2,770. Once we break above the neckline, or some people say we need to break above the previous all-time high, then this will be a reasonable price target. But of course, we may overrun this price target. We may get up to $3,000 level before we start to move down in this. This is going to be a parabolic move to the upside. So that's the reason why I'm bullish on gold. Now let's zoom in and take closer looks at gold and see what might be expected in the near future. This is the weekly chart on gold, and one might say that we have developed an inverse head and shoulder pattern. If we draw the neckline around there, yeah, and but this could also be, let me show it to you. First of all, I want to start with something else. Here we go, and this one. So here we are, and this could be a W pattern formation. And if this is so, I believe this could be measured. The measured move from the bottom all the way to the top, like this. And if we measure that move, here, let me find it. Oops. Okay, maybe I need to delete this one, and then it's easier to find it. Yeah, here we go. Let me measure the price target. So once we break above 1833, then 1978, 1980, something like that is a very reasonable price target. And of course, if we measure the price target out of this inverse head and shoulder pattern, I think we will get a similar result. So what I'm going to do is once we break above 1830, then I'm going to put a long position with this price target and wait and see, just wait so that this price target can be achieved. Let's look at the daily chart on gold. And again, here you can see this inverse head and shoulder pattern. And so as you can see, right now we are moving in this channel. And I think yesterday I shared with you that once we touched the bottom of this channel, and then I said we will probably go to the upside. Right now we have these two levels of resistance, or this bottom resistance has now turned into support. As you can see, we have wicks down, but we bounced back up, so this is now a strong support for me, and we are bouncing back to this area of resistance. We got rejected at around 1810, so 1810 is a resistance for us, 1810-ish area. But once we break above that, we will reach our price target at 1830, 1835. And I see a flag formation here. This could be a flag formation, and we can measure the price target from the bottom to the top of the pole. Let's measure it again. And oops, I want to put it right there, something like that. And as you can see, we have a similar price target. We have 1830. So this pole, this flag pattern, is also pointing towards 1830. So what I expect gold to do in the short term, in the very near future, we are on our way up to 1830, 1833 ish levels, and once we reach that, we will probably be rejected, and we will pull back. We don't need to pull back to this level of, this is going to be hopefully a level of support, but we might pull back to this level of support to around 1810, 1815 area before we go back up and continue our way up, because I believe sooner or later we will even break above 1830. So right now I expect gold to go to 1830. That's my price target. So that's gold. Let's look at the silver chart, see what we can do there, or is there anything that we see there. So that's silver. Actually, that's silver on the daily chart. And as I predicted, and we had this pole, we reached the target 24.7, and I said at 24.7 we will be rejected. We got rejected. We came down, all the way down to this what I consider to be a level of support. Now we bounce back, and we may not fall below that. We may, or we may not. We may fall to pull back to the 50-day EMA, which is right here at 23.6, but this may be a strong support, but we don't have to pull back to that level. Some people expect silver to develop an inverse head and shoulder pattern, where this is the left shoulder, this is the head, and we are going to develop a right shoulder. It may become true. It's not necessary for silver to do that. Silver might be in a stronger bull market than that, but you never know, we may do that. And what I expect silver to do once we break above 24.7 is to come to this level of resistance. And so once we break above 24.8, 24.8-ish levels, then I expect silver to come all the way to 25.6, up between 25.6 and 25.8, somewhere around this area. And we may stop there for a while, have pullbacks, and even before eventually breaking up above. So it's interesting to see silver. What's going to happen here? Are we going to have this pullback that some people expect all the way down to around 23 or even under 23, 22.8, 22.9-ish areas? Or are we going to continue our bull run up? We may continue our bull run up, I think, but we will see. Anyway, I'm bullish on silver and gold. Okay, so that's all for today. See you next time.